1st, April Fool's Day. Not a nice day in the market as we approach the close. Hey, listen, I'm Paul. I'm one of the old guys at Stone Barn Portfolios, and I wanted to take a few minutes and just walk you through a spreadsheet that we've been offering to folks to help them figure out how to allocate or reallocate their portfolios properly. It's a spreadsheet that I've developed for myself. I use it every month, and it's useful to me. I've added some bells and whistles as we go. There's a few more I'd like to do, but I wanted to put this and make this available, get it in your hands if you want it. But I also wanted to show you how to use it. If you're unfamiliar with these things, it could be a little bit daunting and to start off, I'd say. So what I'm going to do is I'm going to share my screen with you and let you have a look at it. Let me just point out before I zoom in on some stuff, there are different sections of the screen, and obviously this big table in front of you with all the numbers and shading, that's where the bulk of the work is done. Up here on the upper right, this is just informational. The yellow cells are input cells, and that the blue cells, they've got formulas in them. So we ask you, don't go type into them. In fact, we've protected the sheet. We put protection on it, and the yellow cells are the only ones that you can change the data in them without unprotecting the sheet. And we do let you unprotect the sheet. We're not trying to keep you from doing or seeing how this thing works. It's fairly simple, very straightforward. But down here this left-hand side is the instructions for the sheet. And you'll note the formula cells are protected. If you have to make changes, select the review tab, unprotect the sheet. There's no password. The protection is to keep you from inadvertently overwriting some formulas, not being able to get back to them. So now, that being said, let me zoom in here to a section of the screen that, in fact, let me do it this way, and that'll help us here. So there I've zoomed in. I hope you can see it better this way. And this is for the first time that you do this. If you don't have an account and you just you're starting with a broker, or you have an account that strictly has cash in it, what I've set up here is a Vanguard ETF account. That somebody might put these different Vanguard exchange traded funds in here and want to own them at these target allocations. You don't have to keep these. I mean, you don't have to use these. You don't have to keep these. In fact, if you have a current portfolio, put in here what the issues are that you hold and how many shares, and then how much cash you have. Again, I'm assuming this is a startup account, that it has cash waiting to be invested. Almost all accounts have some cash available. So you have to type that in. It gives you the total account value up here. Before we get into the meat of this thing, one more variable cell here, and that's the permitted allocation variance. You can see we've got a target allocation here of 25%. We don't own any shares. There's no price, so the variance is 25%. When this thing decides whether or not you need to take any action, the action will be buy, hold, or sell. Before it decides that, we've got to know how many shares you have and what the current price is. So one of the things I'm going to do here is, through the magic of technology and the incredibly adept use of the start-stop button, I'm going to pause here and I'm going to put in the current prices, but I won't make you sit through me going and finding them. Okay, we're back, and I've plugged in the current prices. I just went out to Google and typed in the symbol and then typed in the current price, share price of the thing. So you can see now a couple of things have happened. We've calculated, because now we know what the share price is and how many shares we have and what our target allocation is. We can buy 18 shares. We'll have 18 after we trade it, and the position value will be $22.50 and 18 cents if we get it at that price. and the portfolio allocation will be 22.5. Well, we want 25. Yeah, I know there's a difference there. But if we were to go and buy another share, we'd be over the allocation. The way that this is set up, it only let buy up to, but not to exceed the allocation target that you have here. And then it gives us an instruction: buy 18 shares of VO at the limit 125.01. That's based on where this was when we generated the the order by plugging in the price. So this is important. That limit, we say limit. You can put market in there if you want to, but the instruction is a limit order. Here's why: if the market is moving rapidly, and let's say that VO is going up in price, and you go and buy 18 shares, assuming that the price is 125.01, but it's going up to 150, well, you're going to put in an order to buy 18 shares. And if it's not a limit, if it's a market order, you'll get those 18 shares, but you'll get them at 150 a share, let's say. So you will have spent significantly more than 22.5% of your money, and you'll own significantly more than 22.5% of your portfolio, and it's going to mess up every other trade that you want to take. Or if the market was going down, and let's say you put in this at 125.01 and you want to have 25% of the portfolio, but between the time you do this and the orders generated, you go down, if the price goes down to 100. Well, of course I'm making this up, but what if it did? Well, then you'd end up buying 18 shares, but you'd probably get a price correction or a better fill. If you're a brokerage firm of any worth, you'd get it at the 100, and it would be significantly less than your 22 or 25% that you want. You'd have the wrong number. You'd have the right number of shares that you ordered. You would have bought them at a price too low. You wouldn't have spent enough money to reach your target allocation. So we put this limit order in here as a way of helping you understand that these prices are important. And this is where I think maybe we make an improvement in the future by putting a button up here that you click and it goes out, and it'll take probably 5-6 seconds to go out and retrieve the current prices off of some website somewhere and plug them in. And that'll keep you from having to constantly go and manually type these in. If we do that, then these cells will turn blue, or we'll let you type them in however you want to. Okay, that's the magic of this. Here's one of the problems with it. As we look down here, we didn't hit any of our target allocations, and so we've got cash left over. And that cash is significantly more than we wanted. 7.6% of our portfolios in cash. Well, that's not the way that we operate. We want to be as fully invested or as accurately invested as possible. So let me show you how you correct that. Well, we go in here and let's say that let's look at some of these lower priced shares here, not the $200 ones, but we'll look at here's one that's $65 or so. I'm going to up that to 12%. Now, I was originally wanted 10. I'm at 11.64 now, so I'm 1.5% above my initial allocation. But I'm well within my variance here. Let me do the same thing here. Yeah, let's go to 12% on that. You can see that we've gone from 7.6 down to 2.7% of the portfolio now is in cash. Well, let's go here and make this BIV. Let's make that 6%. And look, now I'm down below 1% cash. That's about kind of where I'd want to be. There's enough there, so if there's some variance in pricing, I'm going to get all these orders in at once and hit transmit, and hope that I've gotten as close as possible. I don't use margin, so I don't want to go into margin if I don't have to. So that's why I keep about 1% in cash. The net effect of the overall portfolio performance is negligible. This might confuse you. It says minus 5% allocations here. Yeah, it is. It's because it's more than 100%. But what we're really doing is we're taking 5% of the account that was in cash and bringing it over here. And so don't let that fool you. It's the way that the spreadsheet works, and that's how you use it. Now you would go in here after doing your trading, put in the shares that you got, and you might want to put in the share price that you got them at, and adjust your cash, and you'll be all set up for next month. The only thing you'll have to do is come in next month and update the share prices to what they are currently, and that'll tell you whether or not you have to buy or sell anything, or hopefully it says hold and there won't be anything for you to do unless you've got new things to buy, in which case you put your new issues down here and put your target percents in. And if you're getting rid of something up here, you'd put 0 as your target, and then it will tell you to sell all your shares. That's how it works. I hope that was useful to you. If you have any questions, as I say, put them in the comment section down there, or go to the, stonebarnportfolios.com and just use the contact form and let me know that you've got a question. I'll either answer it with you, or I'll do a Zoom session with you, or we'll do another video if we get enough of the same questions answering this or asking the same questions. If you'd like a copy of this thing, same thing, go to the contact form at stonebarnportfolios.com. Give us your name, your email address, and we'll send you a copy of this, and you can use it. If you make it better, hey, I'm going to want a copy. So make sure that you reciprocate. This is free to you. This is for anybody who wants it. There's no secrets here. This is the way every allocation spreadsheet tends to work. And like I say, I've used it myself every month, and it was built for me. I built it the way that I use it. So, and it's been very helpful. Of course, I built it the way that I think, so of course it would be useful. But feel free to let me know how if you need more help with it. And with that, I'm going to say, after the worst quarter in a long, long time, we're starting off the second quarter of 2020 in terrible fashion. Although our portfolios are hedged against this stuff. All my money's invested the way that I talk about, and my moderate portfolio, my NDX defensive growth, is actually up today, so I can sleep tonight. And my partner Don and I, we invest, all of our money is invested in the same kinds of things that we're showing you that we do. We want you to be good investors. We want to help educate you. We want to help you understand the way that the markets work. We want to help you understand that some of the common wisdom isn't fully correct, and in some cases it's just downright wrong, and that you don't necessarily need to take more risk to make more money. In fact, we think the opposite is true. Please let me know if you need anything from me. You know how to get a hold of me. I think I've told you enough times. All right, I'm checking out. Sleep well. Stay healthy. Bye.